Joining me here in studio, Mr. Alan Nutman, Chief Market Strategist at BullseyeOption.com. Let's keep it going here as markets are ramping up to start the week. Lot better start to the year this week than last week's start, Alan.
Welcome to the new year.
Yeah.
Okay.
This last week didn't count.
Last week didn't count. Last week was there was a 2-week holiday.
Right.
I mean, I wasn't here the
I
Monday
know.
before, and I
Just
wasn't here
from
Monday. So
Mexico with the daiquiri
and then
in
I was
hand.
skiing last week. The ski is open. So
Yeah.
the season is going to start now. And you know what season it is? It's earnings season. You know what happens on Friday? Bank billions. So this little market pause that I know people are very concerned about after a 25% run in the S&P and a 45% run in the NASDAQ.
Yeah, it's freaky stuff.
Yeah, I mean, whoa. I guess it can't go up every single day.
It was weird to see some red on our board last week. And some of the old kind of culprits came back, bonds sold off a little bit, dollar firmed up a little bit. But we don't really have this much this week until earnings. We got the inflation number, but do you see like the Fed people as being any risk, or is the market in like dreamland there?
Well, my concern really is that people aren't as concerned as they were. And so the psychology has kind of shifted a little bit. We've got a lot of things working in the bull's favor. We've had rates come down dramatically. We have the dollar come down dramatically. We've got earnings numbers that have been lowered. So the bar has been set lower. So that, for me, I think, is hopefully something we'll see some overachievement when we come to earnings season. And profit margins are still there. So, I hate to be silly, but I often am, that, I don't think people have made the connection that corporations are still making all-time record profits, regardless. They've had this pricing power. Who's going to make money in all environments? Companies are. So, people can complain about inflation. They can complain about rates. But guess what? Companies are going to continue to make money, and our stock market, the United States stock market, has overperformed everybody, and that's where the money has gone.
Hey, last year was pretty good for international, but we've got NVIDIA breaking out to a fresh new high today. That usually is a good indication for the key players. But you're not chasing that stuff. You haven't traded tech for us in a while.
I'm not a chaser, but I'm not a naysayer either, like my friend Ben. Now, Ben will not bite on NVIDIA no matter how.
I don't think he naysayed NVIDIA.
No, he's been a naysayer on NVIDIA for our whole life, okay? So I'm just not that type of person that likes to trade a really momentum stock, because there's always going to be some profit taking. There's always, and so it requires a lot more work.
Almost sounds like a naysay.
No, it requires a lot more work, and the way I trade is differently. I don't like to trade momentum stocks because it requires more discipline. I like to use options as a tool to be in position for success for the long term, and with something like NVIDIA, you really got to be on top of it.
All right, so that means you're not really going for the banks ahead of earnings, so they've got some great momentum behind them.
Right, exactly. Look at that. So where were we in March?
Banks are rocking right now.
Can we play the tape of your naysayers in March and April last year? The banks have all come completely back. What about that banking crisis we had? That was an example of bad management and poor hedging, and that's all that was. So, it's still hard right now to find risk-reward plays after the move that we've had. You've got to be more selective. But something like what we're looking at, Zoominfo. ZI today. Not ZM. Yeah. I kind of like ZM. ZM's made a nice little bottom as well, and it's been trading within a range, and it's
Well, you're the comeback king, so I would think Zoom is right in your wheelhouse. But today we got Zoominfo.
Zoominfo. So it's about $16.75. It's 80% off its 2021 top. But I am seeing the leverage buying coming into play, which is what I look for. And I'm also seeing what we had a new low, but not new highs in implied volatility. So roughly we've been between 15 and 20 for the last 6 months. We had a fake breakdown and came right back up inside that range. And there's a huge gap. Show me that chart. That chart doesn't illustrate it, but there's a gap between 20 and 25, a price gap. What happens to price gaps?
They get filled, right?
Eventually. We don't know when, but they do get
filled. That's the one from earnings in July.
Right. So there was some disappointment, and again, I think the psychology for the stock is way overdone on one side, and you're seeing that sentiment shift, that reflection, because the implied volatility did not make new highs, even though the stock had a dramatic new low.
Okay.
So that's
look cheap options wise. Is what I'm hearing.
Well, it's not the fact that it's necessarily cheap options-wise, but it's a sign that the emotion has come out of the stock. Just psychologically thinking, a stock makes new lows or new extreme lows like that, you would think that the volatility would get higher. You think people would be more fearful. But that's usually a sign that the stock has run out of gas, that
Sure.
the sellers have run out of strength. We've seen this over and over again. This is what we saw in the market in general in October of whatever that was, 2022.
Yep.
You saw the turn in Meta. You saw the turn in Apple. That's how you look for that psychological shift and turn. And then, you don't just buy, you just position yourself, buy 3 to 6 month options. So you're there for that gentle incline because a small move in the stock produces big gains in the options.
We're at 1678 right now. What's the strike you're looking for that
I'm
you
looking
want
at
to own?
1250 for April.
Oh, deep in the money. Okay.
So deep in the money. So I was looking at the 15, but I wanted to just get deep. So
Okay.
1250 is what, $4.25 in the money. 450 in the money is trading for about 5 and change.
Okay.
So your expiration break even on this is 50, 75 cents away with 3 months of time and a really fat delta. This is a really fat delta. It's higher than I usually go just because the way there's not strike prices every dollar for this stock.
Got it. Okay. The long trade in Zoominfo. I know you're a technical guy. You don't pay attention to the fundamentals, but Zoominfo, what they do? They help you find people. So,
Okay.
so you could buy the product and you could type in naysayers and find all your enemies.
Oh, that list is long.
Okay.
That list of naysayers is long, but it's getting shorter. And okay, I just have to say one thing. We came within 25 points of the all-time high
The S&Ps.
in the S&P. And my last thing is for my person of the year. You didn't ask me for this.
Oh, 2023? Yeah, give it to me quick.
It's got to be Jerome Powell.
I can get on board with that.
How could you? I mean, that is a genius move. Nobody
Sure.
likes him. Nobody likes the Fed. Nobody likes any of it. But we got the results we wanted. It's about results.
I would like to see another 6-7 months. Make sure there's no flare up in inflation. But I hear you. Achieving the soft landing, definitely. I appreciate it, Alan Nuttman. Thanks for the trade.
Thanks.
Chief Market Strategist, bullseyeoption.com. All right, when we come back, we're going from sector to sector. We're hitting them all. We're going to get industrial when we return and chat with the CEO of Worthington Steel after ringing the opening bell. The New York Stock Exchange. We'll talk about a spinoff and the future when we come back.
Ameritrade is now part of Schwab, bringing you an elevated experience.